Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, rough and tumble already. It's starting. You see this week is difficult. We were long for Monday. It went up. We got out. Yay, Emini go, right? Imagine being long this market. You know me. I'm afraid of the long side. But when Emini says you got to take it to the upside, we take it to the upside. But I will say this. The last 10, 12 trading session, Emini's been up one day, down the next, up one day, down the next. And that is very reminiscent of a market that is about to make a big move. Now, you know, a lot of people think the move's going to be up. Why? I mean, we're in a bear market. The news is bad. More people are getting laid off now than ever in our history in such a short period of time. Europe, the wheels are practically flying off. Why should we go up? And I am here to say, traders, like I do in every video, don't fall in love with the upside. Now, what we're going to deal with in this video for 02-10-09, traders, this is for Tuesday. We are looking at a red Emini in the S&P right back down again. Omni's green on Monday, turns red for Tuesday. Now, there's a good reason for that, traders. Well, very many reasons, but one of them is easy to spot, which I will show to you. If you look right here on the board, I have an illustration of what would be a head and shoulders. Of course, on a chart, it would look exactly like that, but you would have a shoulder, a head, and the shoulder. And we all know that's a head and shoulders formation. Now, I have shown this lesson in many of my classes at the Omni Trading Academy and in many of these YouTube videos, and the lesson is this. Many times, if you get the head and shoulders pattern, you get a little breakdown out of the pattern and then a turnaround and a test of the head. If you do not take out the top of the head, many times you will turn around and break right down. Now, a lot of those tests literally only go to the middle of the head and fail. But the S&P in this last couple of days has put in a head and shoulders, which I showed you in Sunday's video. And it has rallied up and failed at the top where the test usually comes in. So we have a failed head and shoulders pattern, and usually a failed head and shoulders pattern produces a down move. In a bear market, what else could it be, right? So listen, I'd like to show you some charts right now. I think once you see the charts, you'll see why you got to look for some downside in the S&P tomorrow, traders. Let's go look at some charts, and then we'll come back and talk about the levels. Okay, traders, the first chart you are looking at here is the S&P daily bar chart. Each green bar represents 1 day's movement in the S&P. You can see we have been inside of this wedge formation. It's hit top, bottom, then it tried to get to the top, and something happened right here, traders. Something very interesting, in fact. The very lesson I wrote on the board for you a few moments ago with that head and shoulders. You know, I showed you this. And the failure up here usually makes a down move. Well, watch this, traders. Shoulder, head, shoulder, right? Rally, rally, fails to get above the head. And already we've come down to here this evening. And in fact, traders, we've already looked at a short trade at 8.59. We took a quick short at 8.59 and market's all the way down to 8.52 or 8.53 as we speak. So far this is actually working out well. Now traders, the likelihood is that failed head and shoulders should push us back down here and at some point take us right through the bottom. Now you do realize if you've been watching my videos lately, NASDAQ has gotten above my Omni proprietary average. The S&P has not. It comes in right about here. It has failed to get above it. The Dow Jones Transportation Average has not gotten above it, nor has the Emini Russell ETF. So I'm here to say, you know what, traders? This looks like a failure, and I'm going to trade it as such. We're in a bear market, in a bearish formation, within that bearish formation, another bearish formation, and then a failure when it tests that head or the bearish formation, the head and shoulders. That's enough to make me think downside. Now let's go look at some technical indicators that can help confirm direction, traders. Let's look. Okay, traders, we are still looking at the daily E-mini S&P, but now this is an indicator that we use to gauge direction. This indicator right now is the CCI, or the Commodity Channel Index. And clearly, as you can see, when it gets this high, it is getting into the overbought area and looks to come back down. It's been this high, and it's already hooked on its way back down, and it's down to here. So the CCI indicator, one of many that we use at the Omni Trading Academy, is pointing south, as well as the formation I showed you on the chart. Let's look at a few more indicators here, traders. Okay, traders, the next chart on the block, again, staying with the E-mini S&P daily chart. You are looking at another indicator right now. We are looking at the RSI, Relative Strength Indicator. Clearly, it got just above its overbought area and failed, and it's on its way back down. So we had one pointing south. Now we have another indicator pointing south. And, of course, the whole formation is pointing south. So indicators are starting to verify the formation, which looks bearish, right? Well, let's look at a few more indicators, because you wouldn't take two indicators and make a decision. You look at many indicators and make sure that they're all pointing in the same direction. So let's look at a few more. All right, traders, the next chart you're looking at, again, is staying with the E-mini S&P on a daily fashion, but this is the DMI, or Directional Movement Indicator. And if you have followed along in my lessons, or if you're an analyst and know how to use this indicator, when the green starts to point down and the red starts to point up, you have a bearish situation. Right now, the green clearly beginning to point down, and the red's just starting to turn into the upside. So I'm thinking that by tomorrow, it will look like this. They will start racing towards one another, and you have a bearish indicator again. So as you can see, the indicators are stacking up. We now have three pointing south, and the formation itself pointing south. I think we're starting to see a theme here, traders. Let's look at one more indicator. Okay, traders, now we're looking at slow stochastics on the S&P chart. And although they didn't quite reach their overbought level as they've done back here, it has gotten up near it and hooked down. You can see this little hook already pointing down. The likelihood is that it will continue, and the blue will catch up to it and cross, and we'll start to head down again. So it looks to me, traders, like the rally that we got waiting for the stimulus package to come out gave us this rally in the S&P, and it's beginning to look like it's failed already. So I'm thinking probably a fundamental in here is the anticipation of the stimulus package. The last stimulus package they released, traders, we rallied before that package came out, and then we dropped 500 to 700 points after they released the indicator in the Dow. Excuse me, after they released that package in the Dow. So, hey, we've had a rally. They're about to vote on a package. They say it's coming out this week, a rescue package. Likelihood is we're set up for the downside, traders. Do your homework, pull your indicators, pull your charts. Make sure you can find the same things I'm looking at before you consider taking a trade. So, traders, you see those charts? Look, traders, the analysis speaks for itself. I'm here to follow the analysis as I do purely every time I do homework on a chart. I let the fundamentals, I let people's opinions, I let the price action all come out in the charts, all come out in the indicators, and I decipher those. And that is what you should do, traders, because you have seen time and time again the Omni call the proper direction, and the Omni uses a lot of technical indicators to figure out which way we're going. Make sure you do your homework. Traders, if you like the homework I just showed you on the board there, the technical analysis, come on down to my site. It's www.livewithoscar.com. Grab yourselves a free membership. Jump in the chat rooms and allow me to make you a better analyst and a better trader, because that's what we do at the Omni Trading Academy. We help you traders take control of your finances and learn how to get in and out of these markets correctly without emotion. We hope correctly anyway. You know how that can work, but that's what stops are for. And traders never trade without stops. A stop is your best friend. If you're not placing stops, traders, you are susceptible to the absolute worst market moves against you. And you know what? They always find the traders without the stops. Make sure you place your stops and place them first before you enter into a trade. All right, traders, I always like to say never trade alone. It's on my board. It stays here at all times. Never trade alone. Make sure you come on down to the Omni Trading Academy, huddle with us traders, and let us work together in unison to try to get these markets right. All right, traders, now, what are we going to do for tomorrow for the S&P? Well, I'll tell you right now, we bought 52s. We sold 59s. We bought them somewhere back near 52. We're still looking for the original Omni trade to get hit, and that is this. For tomorrow, we are looking for this S&P on Tuesday to head down. Omni says to sell the low to mid 860s if you see them in the S&P. You cross above 60, 1, 2, 3, 4, 5, somewhere in there, you're going to sell into that mess, traders. So you sell it if you cross the 860s and start to move up. Always place stops, as I've said. Always put them in a sensible spot that A, your equity can afford, and B, you can live with. But always put your stops in. Traders, the profit objective on this trade is the high to mid 830s. We're selling them in the 60s. We're expecting this thing to break down into the 830s. If that happens, wow, baby, it's going to be a nice day, right? I'm looking for it. I'll tell you that much. I'm going for it. Those indicators tell me to go for it. The formation tells me to go for it, and I am going for it. All right, traders, listen. Always be out of every trade I give you. If I give you a recommendation, you get out before the close. We do not hold our trades into the evening sessions. On the way down, if you do sell 860s, the 840s, high to mid 840s offers some support. So if you get short in the 60s, if you get that lucky and it gets into the 40s and stalls, you may want to take some profits if in fact you're on the right side and this happens for you. If it gets through the 840s, I think mid 830s like that. So let's see what happens. All right, traders, again, do your own homework. Never take anybody's trade or their recommendation unless you've done your own homework and you can back up those ideas with your own analysis. All right, traders, I'm about done. I don't want to do anything else in this video. I want to go back to work and watch the markets. Remember, give me a call anytime, day or night, 702-629-4755. And say this to yourselves every morning, every afternoon, every evening. Say it when you're brushing your teeth, when you're eating cereal. Say it when you're in the bathroom. I don't care when you say it, but make sure you say this every day because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.